Good afternoon, all. I hope everyone is well. Um, I've decided to start recording my analysis of my trades, purely to help me with reviewing my wins and my losses, and so that I can help reason with myself as to why a trade would win and why it would lose. Today, I'm going to review a Japanese yen futures trade I have taken. As you can see here, I trade quite a lot of indices and symbols across different markets. So you have some American indices here, soft and hard commodities, and then loads of currencies, including one crypto. I trade very simply and mechanically, but also very subjectively and not two-dimensional. This helps me to offset and manage risk appropriately during any economical event. Now, the way I trade is with market theories and economical indicators rather than technical analysis. Technical analysis for me is purely used to entry and exit trades or to time my trades during the day. For me, time is of no value, so I disregard time completely and I purely focus on when the market gives me the opportunity to trade. Okay? First of all, I'm going to reason with you why I trade so many of these pairs. A lot of people will advise people to only specialise in one pair or one market, one industry, one sector, whatever you trade. For me, I'm very simple and I'm very open-minded with how I trade. I allow the trades to come to me. I don't chase or force trades. Firstly, the key US indices I trade: NQ, so this here is the micro version, micro ES and micro Dow. These three here are three very key and large markets with a lot of volatility, volume and liquidity in them. I trade these very simply and with an open mind. I purely trade with market theory such as the auction market theory, supply and demand, and also fundamental data analysis. I purely use technicals to time entries and look for exit points. Here, crude oil is a soft commodity, and obviously the hard commodities, gold, silver and copper. These commodities here I use when there are key times in the economy of economic uncertainty. For instance, wars, elections, high impact news, etc. These here help me to offset risk, minimise losses, contribute to larger wins, and also sustain healthy trading accounts. I trade with Top Step X, so I have two express funded accounts, and this helps me to minimise the downside potential in my trades. I very simply use the commodities like gold and silver in a very diverse but simple way, purely by using fundamental analysis to do with jobs, application data, interest rates, Fed bank decisions, which will derive my opinions of where the market and the data suggest the market can go. Gold and silver are commonly used in times of worry or uncertainty. For instance, with election coming up, etc., you do tend to see a larger spike in gold and silver. I also trade crude oil due to the current wars and global affairs at the moment. Crude oil is a very good market I've been looking at. I haven't openly traded it yet. I have been backtesting, and now I do plan to fully get myself involved with trading it, purely because of the current wars going on, and quite a lot of fundamental data suggests that oil is actually overpriced and oversold. So that as you can see, it is a depreciating asset over the previous years. If I show in a weekly time frame, you can see since its inception, crude oil futures has been in a decline. I also trade copper as well due to its applications with the tech industry. Of course, quite a lot of cabling and wires are used for telecoms, power grids, motors, etc. Then I also scope over Bitcoin as a crypto, Swiss franc, Aussie dollar, GBP, Euro, Japanese yen. I use these currencies very simply because I trade with fundamental data, also with thematic analysis as well. I'm very broad with how I trade. If I see a country, say the Australians, have higher produce, I understand that this will increase the strength of the currency. So the purchasing power is going to increase. So I will look for buy setups using this currency. Again, with these, I haven't traded them actively yet, except for this one, which I'm going to go over a little bit. I'm very flexible with how I trade currencies, very simple as well. So when there's big news coming out, I will look to get long before and manage to trade during the news. So on Friday, the 2nd of January, I took a trade, my only trade for this week, on Japanese yen futures. Quite a lot of people tend to disregard the Japanese yen because of how weak people perceive it is. However, if you understand fundamental analysis and how it works on a broader spectrum, you will understand that this currency is also a very powerful currency if traded correctly. So let's get into the trade. I trade very simply when it comes to my strategy. It's a very broad and dynamic strategy. However, when you get used to it, it's actually very simple and allows you to be completely flexible and emotion free. So the first thing I look for is either a strong sell or a strong buy in any direction of the market. As you can see here, I've drawn out a key area of interest on the 15-minute time frame. So we have a strong sell down here. This sell has liquidated 15-minute lows, a range low, and on the 4-hour chart, as you can see, we have also taken out some significant 4-hour lows and tapped into a 4-hourly FVG right here. These were two technical confluences which I used to support my analysis of coming long in the market. The major player for me was I analysed the the Japanese government bond markets. In times of growth in any country, you will see bond rises increase purely because the government is trying to offset debt, so it encourages more people to buy and hold their assets. This decreases their debt and it increases the strength and the purchasing power of their currency. If you look at a 5-year period, for example, the Japanese bonds have been in a very steady increase since 2022. This shows me that there is strength in the Japanese yen. This also influenced my decision to look for longs during this day. Once I had my area of interest marked out and I could see 3 very strong candles out of this zone, this highlights to me that there are a lot of big players and large volume in this area of the market. And using a bit of common sense as well, you will understand that the market has tried to return once, twice, 3, 4, 5 times, 6 times collectively over the space of 4 trading sessions. This shows me this area is a very strong area of interest for the market. Okay, I trade this very simply. On this currency pair, for example, if I see a candle close below this bottom green line, the trade is invalid for me. I don't take it. Price needs to respect this bottom line of this zone. I have to see a minimum of a 50% tap into this zone, so this red dotted line, before I can look to get long or short in a trade. So as you can see, this here for me is not valid. Why? Because you've not come back into the zone before pushing off. Here, lovely push up, nice push down. We've not broken structure, had a market structure shift to the downside again. Why? Because we haven't closed below this low here. So this trade is still valid for me. As you can see, we've come into 50% of this zone and we haven't closed below this green line, so it's still valid. Now I'm looking for a candle close, which is decent enough for me to get into the trade. As you can see, I entered here on this closure on the 5-minute chart. If I pull it up so you can see, off of this candle here, and then I managed the trade as it progressed. Originally, I'm not going to lie, my target was this high here, so I actually got out of the trade on this candle because I was targeting that, but because price was chopping about so much in here, I decided to aim for a 1-to-1, take my profits and get out of the market, which we did get off this candle here. So I took this trade when I saw a clean break out of this zone. I entered with 2 minis, stops below these lows, and I target the next areas of interest, so i.e. this supply zone here of these highs. And that's it. And if I ever see data come out which could suggest a negative side to my trade, I look to either get out of the trade, take contracts off, or manage with a trailing stop as appropriate. And it's that simple. So I got out at a 1-to-1. I risked 100 and made 100, so it's pretty good risk to reward. I was aiming for, what's that? I was aiming for about 1 to 3.5. However, in the end, price didn't get there anyway because we did have a supply set up there on the 15. Nothing really valid there. And then on the hourly, of course, you're coming to an hourly supply setup just there. So I could have targeted that. However, because of how price was moving about during the day, and I wasn't actually on the charts during this. When I came back on at the start of New York, I decided to just take the profits there and call it a day. So the account is still healthy. Both accounts are still fresh. And for proof, I can show you the trade. So as you can see here, 6J, Japanese yen, 2 minis. Here's my entry time, exit time, 6 hour trade in total, entry price, my exit price, the profits, and some fees to get out of the trade. And obviously you can see I was going long there as well. Okay, so that is the first trade on the new year. The reason why I'm doing this is so that I can force myself to review my trades appropriately and have more accountability for myself. And it also helps me to log what I'm doing. And as you can see, look, I'm fully funded. I have 2 accounts, okay? Spread accounts, Top Step X. You can't fake this. I've taken plenty of trades before, some big wins in there for my account. 358 profit. However, going forwards, I'm looking to log my trades and record them so that I can have something to reflect on rather than just seeing it like this, because this to me is useless. Okay, I trade multiple strategies, but this is a new strategy I've been testing and now I've been putting into practice. And as you can see, it was a nice little win on a Friday with little volume in the market. I hope that made sense to everyone else. One thing I want to pick up on as well is that during this trade, I was debating whether to get out at this point or not. However, since we made a fresh demand zone inside of a existing demand zone, there and here, I was more confident that this would reverse. So I stayed in this trade and didn't look to exit at all. I hope that makes sense. In the future, I will list my rules for my strategies. I trade 4 strategies across all of these pairs. All 4 are very consistent and very profitable. I am fairly new to the game. However, I've been trading for quite a long time and have blown a few accounts, hence why there's not a lot of trades on here. I've had both accounts for roughly about 3 months now. So yeah. Anyway, I hope all is well. Thank you for listening, and I'll see you in the next trade. Trade well. Thank you very much.